Hey, what's up guys? This is ZQ Chiu here. So in this video, I'm going to show you one of the most effective trading patterns known as the advanced cup and handle pattern. So, many traders, they use this pattern the wrong way, and that results in a lot of losing trades. And I'm going to show you how to fix that. So the advanced cup and handle pattern is like a gold mine when you learn how to use it right. And I'm going to show you how to spot it the right way, how to avoid traps, and how to make the most money out from it using this special combination that I have created. You're going to like this one. Let's go. So first off, what is the cup and handle pattern? So the cup and handle pattern is a chart formation that indicates a possible upward trend, right, in any vehicle. So whether you are trading stocks, Forex, commodities, or crypto, it works the same. So it gets the name from its like a teacup shape, right, which is made out of two key segments. So the pattern is in an uptrend. Whether it's an uptrend or downtrend, it first forms a U shape, or what we call as the cup, which is followed by a consolidation, which is what we call the handle. Here's how it looks like. So now let's break this down, the cup. So what happens is the price rise and then pulls back to form this rounded bottom. And then after that, it climbs up again. So this creates what? The cup shape, which is marked by what? An increasing highs and lows. So this signals what? Upwards momentum. So then the next one that forms the shape, the handle. So once the cup is completed and price reaches the top, there is a minor pullback or a consolidation, which is what we call the handle, before price tries to break above the resistance level. And that is the neckline. So here's the thing. Most traders, they rush to buy when price breaks above the resistance level, assuming that it's going to keep climbing. But hey, we know better, right? The cup and handle isn't just about breakout. What is important is that this setup is about building momentum. So when you combine this with the right confirmation signal, it's going to give you a high probability trade setup. And it's not just like you enter a trade and hope that it will work. This is going to be a high probability trading setup. Now, here's the thing. This cup and handle pattern can be either continuation from a previous uptrend, or it can be from a previous downtrend and is strong enough to form a reversal to turn the downtrend into an uptrend. So this pattern is strong, and you want to add this to your trading library, your trade setups. Now, depending on the time frame that you're looking at, so obviously if you can see this, right, it takes time to form an entire cup and a handle, and it takes quite a number of bars, right? And that's why it is so powerful, because the bigger the setup, the more powerful the move is going to be when it goes. Now that you know the cup and handle, let's now talk about the neckline. So this is a horizontal resistance line that is drawn at the top of the cup, where price tends to stall before making the breakout. Next, breakout point. This is a buy signal that occurs when price breaks above the neckline. So now, once price broke from the breakout point, which is the neckline, right, we're going to add something here as an extra confirmation to increase the probability of it working out. All right, you ready? It's the volume. So the volume tells us the strength of the market at that current moment. So it is important to gauge the strength of the breakout. So here's what to look for. The volume should decrease during the formation of the cup and then increase as price breaks above the handle. So this indicates a strong buying interest at that moment. The formation of the cup isn't going to be too strong because it's gathering momentum, but it should increase when price breaks above the handle. So now, next, breakout confirmation. A successful breakout above the neckline with the increased volume is going to be the key to confirming the strength and the probability of this pattern working out for a big upwards movement. So here's an example. Take a look at this. The market is what? Climber, right? It's a very determined one. It's like climbing and scaling the mountain. So step by step, rock by rock, it goes higher, higher. Then it will take a brief pause to rest, to catch the breath, and then you climb again, right? So each pullback is a moment of resting before climbing higher. So now, here's where it gets interesting. When we spot the cup and handle forming, the last pullback is longer than the earlier ones. Okay, here, pro tip. When you see a build up, this means that the market is gathering momentum. So I know that some of the traders, they like to short the market, sell the market at resistance area. I mean, that's not wrong. But when you see a build up forming, you got to be careful and you got to stay out of shorting. So with this build up, I mean, all kinds of build up, they look different, right? But they are the same concept. So like instead of a big drop, right, price can drift lower. It's like taking a breather. There's no panic, there's no crash. It's just a slow, controlled downwards movement. That is still considered a build up, which eventually flattens out, forming that handle itself. All right. So, but here's what most traders miss. They see this dropping. They see this dropping or this consolidation. Whether is it dropping, whether is it consolidation, like I say, all handle looks different. This is not weakness. This is the market setting itself up for something bigger. So traders would think that price is respecting the resistance area, it's not going to break through since it's already coming down or consolidating. They think that they're going to go short. No. So after the cup is formed, price pushes up, right, to the previous high. But instead of going right through, right, it hesitates. So the sellers step in. They try to force the price to come down. But if you notice what happens, price refused to drop below the last swing low. So this is the handle. So even as price dips, the structure, it stays intact. This structure, it stays intact. So this tells you that what? The buyers are not backing down, you know. They are still in control. They are absorbing the sell orders. So keeping the market prop up. So this is not random. That's what? That's the buyers digging in. They're defending the ground. So the uptrend is not just holding. It's getting ready for the next move. So when the pressure builds enough, you know what happens, right? You know what happens, right? It's gonna go, right? So now the big question, how do you trade it? So most traders, they just simply wait for a breakout above the handle and jump in. Okay, but here's the thing. Breakouts are not always like clear cut. They are not always clean. Price can fake out. They can fake out. They can hesitate, or they can even pull back before the real move. So instead of just blindly chasing a breakout, a better approach is to wait for confirmation. So the confirmation can be what? It can be a strong close above the resistance, or even a retest of the breakout level. So this way you're entering with more confidence and not just like reacting, right? So what is a strong close, right? A strong close is when the bullish bar, right? The breakout bar, that bullish bar is longer than the previous bars or candlestick, right? So this green bullish bar also closes at the top quarter of the entire bar. At the top quarter, not in the middle, doesn't close in the middle, doesn't close below the middle. This shows what? By closing at the top quarter, it shows what? It shows strength in the bar itself. And it means that at that very moment of breaking up, this bar represents the buying momentum. And the buying momentum is really strong, way stronger than the sellers in the market right now. So now that you got the confirmation bar, you got a confirmation signal for your stop loss. So where are you going to place it? Place it under the swing low. So if there's a build up, place it under that build up. right? So, I mean, obviously stop loss is important, right? For managing a risk, it protects your investment. If the market doesn't go your way, at least you get stop out and you cut your losses short. So then next, the cup and handle is one of my favorite patterns. Because why? It gives you a very good risk to reward ratio, especially when the handle shows a tight range. So it's like the market is building up its energy, getting ready to move into the direction. So cup and handle pattern, here's the thing, it's not a rigid formation. It's a what? It's a concept. Some cups are deep, some are shallow, right? Some take weeks to form, some take months to form. So the point is that there isn't a textbook perfect setup, but to recognize this overall structure and confirm that the buyers are in control before you make your move. Now let's go deeper. So here's another example where you can see the different shape of the handle, right? Which is like what I said, it's not a rigid formation. So when you trade the cup and handle, you should enter the buy position when price breaks where? Above the handle, right? So preferably with what? Increased trading volume, correct? So in this case, the handle, which is why I'm giving another example, right? The handle is not the neckline, it's not the resistance line at the top. In this case, it is the trend line. So now, for your stop loss, I mean, apart from just setting it at the lowest point of the handle, which is the recent swing low, and you can do that, right? If you want to be more conservative, you want to be safe, you want to avoid spikes, what you can also do is you can set it at 1 ATR below the swing low. So now, for your take profit target, you measure the distance from the bottom of the cup to the neckline, right? And then you add that distance from the breakout point, which is the neckline, to get an estimate of how price would go. So it's 1:1, okay? Now, that is theory. So in actual, I mean, it's good to know potentially where will you go in theory, but in actual, what you want to do is you want to switch the time frame, right? You want to look at a higher time frame. So wherever you see the cup and handle pattern, right, jump a time frame up higher to see where the next rejection area is. And then you also want to check the probability of price reaching the area. Can it reach the area? If the answer is yes, okay, good, right? So that's where you can potentially set. But hey, whether or not it will likely get stopped there, so if it's likely going to get stopped there because there is a very strong rejection area, then you want to get out there, right, in a higher time frame. Or it will likely even shoot past the area to go towards the next rejection area. So if that's the case, that's where you can probably set 2 take profit, TP1, TP2, or potentially even set it up higher at the next TP. So now, as an add-on, as mentioned earlier, look for higher volume when the breakout happens. Look for higher volume when the breakout happens. And then you look for a good confirmed closing when it breaks above the neckline, or in this case, above the handle trend line. So when you have all this in place, you have a good risk to reward setup that you can use anytime. So even if you're new, right? Even if your trade selection isn't that good and your win rate isn't that crazy great, but with this kind of good risk reward ratio every single time, and the power of this strategy combination that I've just given you, you will be profitable as a whole if you just keep taking this setup every single time. Good? So thank you so much for watching. If you enjoyed this video, please give it a thumbs up, right? It really helps to keep the channel growing. And if you are new here, don't forget to hit that subscribe button and turn on the notification bell so that you never miss an upload. So we also love to hear from you, right? Drop a comment below and let us know what you think or what you'd like to see next. I mean, your support truly means the world to us. It keeps us motivated to bring you awesome content every week. And if you're keen to learn more, I've created a free 5-part comprehensive training where I show you exactly how I trade using my lifestyle method. Link in the description below.